The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, we're going to start the show by talking about the George Lindy's Three Peaks and a Domed House pattern. It's been hit on the internet quite a bit now these last few weeks, and several people asked me about it. I happened to have met the gentleman before, and he's a very nice fellow. The problem was that he was he was very flamboyant. He was one of the first people ever to come out of the closet, so to speak, and he was a really very a unique individual. Arch Crawford knew him pretty well because they lived close to each other in Greenwich Village, but he did have a tremendous ability for picking highs and lows, and basically, what he did was he looked at, price patterns in the past and then brought them forward in the future. He didn't use, Fibonacci numbers, but he did use numbers of similar numbers. In other words, from high to high, low to low. He was actually probably using them, but he didn't even know that he was using them. So that's the main thing. He happened to die on August the 17th of 1987, which was the high of the stock market, right before the crash of October of 1987, and he was actually predicting that crash. He passed away in California. I believe he was 85 when he died. He was a good friend of H.M. Gartley. He knew quite a bit about Gartley, and they shared a lot of ideas and stuff. Gartley died, of course, in 1969. So that's it. After George Lindsay died, Jerry Favors from Ohio, a very, very smart fellow, a good friend, resurrected his work and had his letter that was the Favors newsletter. It was incredibly good, and Jerry was a consummate technician. He was as good as you could possibly get. The problem was he worked 24 hours a day, and I'm not just kidding you. He literally lived at his desk, and unfortunately, that's where he passed away. He wasn't even 50. I think he was 48 years old when he passed away. I had the good fortune to know him and his wife Leslie, and he was a really nice guy. And he just worked himself to death. He just didn't enjoy himself very much. So that was the big problem. Now, what I'm going to do now is after. It's been about 25 years now since he's passed away, a little bit more, and then a guy named Ed Carlson up in Seattle. He's one of the fellows who put together the Market Technicians Association for Seattle, wrote a book about the Three Peaks and the Domed House and George Lindsay. It is the best work that you can possibly find on the subject. And anybody that would really want to know about it, I would suggest you really take a look at that book. It was, very, 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 very good book on Lindsay himself. So what I'll do next now is I'd like to post a chart that is in the letter that Ed Carlson puts out, and it is it's very interesting because it is very similar to what we're looking at now. Only it does he does a lot of the counting like what Lindsay actually did. I hope this comes out pretty good so you can see that they're looking at the counts, and this is an up-to-date chart of what we're looking at. And of course we look at this as a three peaks and a domed house, of course, but I don't call it that. To me, it's an expanding triangle, the T6 pattern that what we had in for the Gartley pattern. In Gartley's book, it's the T6 pattern that we have, and okay, Okay, I'm sorry. This is I'm not able to post that chart. I'm not able to do that. So unfortunately, I can't put that chart in there. So I'll just have to, go on to the next subject because I. But anyway, if you get a chance, I'll just walk through these numbers. In just a second here. But basically, what we're looking at is the numbers of days between these highs in comparison to these other three drive to a pattern that we're looking at, which also is the domed house, which is that last leg, that expanding triangle. It's going to be a little bit different here. So I'll have to do one simple thing here, and then I'll be ready to go, and we should be okay here. Give me a second, and I will be back to my what I'm trying to get to, folks, is my my chart, my Ensign program, so that I'm able to post my charts so we can see the things that I think that are really really important that we're looking at for today. So the days that we're looking at with the three peaks in the domed house have already occurred. In other words, it occurred on December the 31st, and we came down for the 23 days, and then we're having this this rally that should be very strong, which in fact it is. We've reached the 786 retracement in the S&P cash. The NASDAQ has almost made a perfect another drive to the top, just like it did before, and it'll probably either exceed that top today or tomorrow. And then we have, coming in Friday, we have the full moon, and then we have Mercury going retrograde. So that's also all part of that Bradley date stuff that we look at. So that's what we're looking at from that spot on. And Monday's a holiday, so there's going to be some wild action coming in Monday. So these are things that we're really, is the thing is what we have. So what I'm going to do here is I'm going to try to post a chart here if I can. I'm having a little bit of technical difficulty. With those of you who know me pretty well, know that is not a understatement of the year. So now we should be able to get a chart in here and talk a little bit about the technical part of the market. Okay, as you can see, what I posted in here is the NASDAQ chart that goes back, to early December, and as you can see, we are completing this pattern that we've looked at before. And what's interesting about this is that we're looking at time to time to time from each of those highs, and that gives us a time to come in either today or tomorrow, possibly Friday. But if it goes up and makes another new high, that would be an expanding triangle again, and that would also be another place where you would be looking for the market to reverse. And you're having divergence because the Dow Jones Industrial Average is lagging badly behind the rest of the market. So that's one of the reasons why we're watching these time frames that are coming in here. It could happen anytime because we're in the window of when it could happen, either Wednesday through Friday, and of course we have the holiday on Monday. There'll be some trading, of course, in the overnight market, but we're the only country in the world that'll be closed for President's Day, and so there will be action in the other markets also, but we should have some pretty good movement going on in that particular market when that occurs. Now there is another chart that I think that we need to look at, and that is the QID, which is the ETF for the NASDAQ. I believe it's double weighted, and it is making that pattern already. It is making the 5-point reverse wave pattern already. It's already completed it here, and so it's ready to rally at any time. And the cycles that we've had here have been 3 weeks long on the bottom, and as you can see, the expansion occurred right where it was supposed to. And so all of those things are telling us that we should be at a spot where we're going to be running into some pretty good resistance as far as a market getting ready to roll over. And I really believe that we are getting close because we're seeing a lot of divergences, and all of these time things are coming together. The fact that we had these big downdrafts to start off with and the rally back, that is not to be unexpected. Bear markets are never easy because the people remember short covering what it's like, and they go straight up, and it bottomed right on the 4th February, which was the exact squaring of that time and price that we posted there for the NASDAQ. It was an exact number of days down from one high to one low and one high to one low. That occurred on February 4th, and now we're in this 5 to 6 day rally. And if it's correct, we shouldn't be any higher than that when we come in to look at the charts, on Tuesday morning. We'll see, what happens at that time. Because if the market is still charging ahead strongly on Tuesday, that would make us think that we probably are going to make new highs in some of the other indices. Right now, we've only made 61% retracements in the New York Stock Exchange Index. We've made a double top so far in the NASDAQ, and we have made a 786 retracement in the S&P futures. The Russell is far, far behind the rest of the market, so that's that's not to be unexpected because it broke the most when we came down. Right now, the Dow was up earlier, about 50 or 60. It went down to be about down 50. Now we're up about 30, and we want to take a look at the Dow Jones when we get back, from our break, which will be soon. We have another market that's getting ready to really start motoring out of here, I believe, and that's gold. Just a slight move above the 1297 level, I think, would get this market moving really to the upside, and that's what we have happening right now. That it's just getting ready to looks like it's ready to break out. Hasn't done it yet, but it's close. As is silver. It's not too far behind if it's going to do that. We've been waiting to see if it would get to this level, and we are certainly knocking on the door right now with that, with both gold and silver. We will take a look at the Treasury bonds also, because bonds are starting to fade again, and it looks as if we're going down to retest those other bottoms. And we'll see. Someone asked a question of, when I look for a place to buy gold, and we were buying it down at the 1250 level. That was a 61% retracement off the last low. But gold has given you so many chances to buy, folks, because it has been had nothing but higher bottoms all along for the last 5 or 6 weeks. It's just been, one after another that it's been able to, to do that. So that's that's really what you're looking at when you're dealing. And trades very, very nicely as compared to the market for silver, which is like 1/6 of the liquidity that we have for gold. But silver also is breaking out, and it's also beginning to look like it wants to go higher. We'll look at that gold chart, of course, when we get back from our break, because we've had some periods of where we just talk about stocks, and I know you folks like to talk about something else. And we've also had a question about the IBB, and we'll answer that after the break. We got the Dow up about 30, down about 30, NASDAQ is up, gold is up 5.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Andy Heck's powerful weekly newsletter, The Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I wanted to talk a little bit about the gold-silver index. We've had a question about it. We've also, had a very strong move in that index. We've been, give me 1 second, and I'll put it in the room instead of just talking about myself. With looking at it, we'll be able to let everybody see it. As you can see, we made that time and price squaring down around Christmas time. That's where we had the ABCD completed and everything, and then we had the really strong move. This is when ABX was down around $15, and now it's it's still moving a lot higher. We're making the same type of move now. You see, we've broken out in the XAU. We're up at the 786 retracement on this gold-silver index, whereas in gold itself, we're at the 61% retracement. So some of this stuff, all we need is a move above 1297 on a closing basis, I believe, in gold, and we could get a pretty good run in it. It might be a fake out, but this is a pretty strong spot up in here, and it's got to get moving really closely. The fact that the XAU is not up on a day when you have both gold and silver up is a little troublesome. So I would certainly keep that in mind, when you're thinking about doing it. Boy, I tell you one thing, folks. If there's anything in this business that I've ever learned, and that is buying breakouts is about the doggonest dumbest thing that you can possibly do. It really is. I've never had any luck with it, and frankly, I don't ever want to try it again. But I know some people like to buy breakouts, and when they work, they work very well, but I'm just not a very good breakout trader. Mark Douglas worked with me on this for weeks and weeks, because when these patterns that we look at fail, they usually go to the next number of what you're looking at, and that's why it's so very interesting. When you see these patterns and when they fail, they traditionally move to the next level that you're looking at, as far as what the next move will be. And so that's what we're watching. The American Barrick, someone asked a question about that, and I'll bring this one up before we get to our break here, because we were very bullish on this back in the $15 area. And here again, you'll see another chart where it's also, this is probably one of the reasons maybe why the gold-silver ratio is not moving as strongly as we would expect, is because we're up against this really strong resistance that we're having in gold up here at this 1296 area, which is the 61% retracement of that high we made several months ago. And silver is still far below that level. So there's some little skepticism here. You need that really strong volume and buying coming in here to push these markets higher, to make sure that you're in valid breakout areas. It's much better to buy on a pullback, in my opinion, because then you're able to see that you have a better chance of getting a lower risk entry in anything that you're looking at. So that's keep that in mind on this gold and silver. We'll cover this a lot tomorrow, because we'll have more time, of course, to look at it if there is a breakout tomorrow. And if there isn't, then we'll be able to see what the next scenario will be. But that'll be on the Commodity Show. We're having some good move in wheat. That's telling us that some of these grain markets have finally started to reach a pretty good bottom in here. That means we'll probably have a lot of volatility in the month of February. Speaking of volatility, as most of you know, I've written a book about astrology that hopefully will come out sometime this year, and we've made some tremendous breakthroughs in what causes some of these things to move up and down. And the month of February is one of our most volatile months of the whole year. And I will give you the dates. The first one is today. These are for stock market. They can be for other things too, because they're just so high energy related. But the 12th of February, the 19th of February, and the 25th of February. Those are the big days that you want to be watching to see, wild action where you might get a reversal or hit major support, major resistance. But those are the really key astro dates that are coming in. They have nothing to do with the lunar things. They are compiled by looking at all of the different planets, and each of the planet is weighted a little bit differently than what Bradley did, so it has nothing to do with the Bradley model, but the ideas of it came from the Bradley model and the Pesavento index, which is, the number of aspects that occur in any one day, like 3 or less is a P-index day, or 14 or more aspects is a P-index day. And these days that we're looking at, based on the way that we reevaluated this and tested it, it's testing out very, very well so far. Whether it'll continue to do that, we'll see. Okay, folks, we got the Dow down about 35, and the gold is still up about $5, and we'll be right back after this message.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Chart that I'm talking about first is the IBB. This is the biotech index, and of course that thing has been the strongest of just about all of the indices. And after we made the ABCD pattern down there on February the 4th, we've gone up to new highs. We've almost made a 1.27 expansion. We could do that either today or tomorrow without too much trouble. Just remember, folks, if we go below the February 4th low, to me that is a very, very critical level. I mean, when these cycles fail, and you know that is a very important low. I highlighted that in the newsletter this week because there were, I think, 7 things that I brought about to say why I thought that February 4th low was so strong. And if we go below it, that would be something that is just incredibly negative. This is where I got into problems in 1974. You know, I used to buy these cycle bottoms every 14 to 28 days, and for 3 years it worked like magic, and then for 2.5 years it worked like the devil itself. And I didn't know what the reasons for this were until many years later, until I understood a little bit of cycle theory and some common money management things like never add to a losing position and never answer a margin call and things like that. So that's what we're watching. This February 4th low is incredibly important. I've also posted the chart for the Bradley model into the Tiger TV, and you can see that we've made a 50% retracement now in the Dow Jones Industrial Average from our low from February 4th and our high on December 31st. So that's a very important number. We're coming in, as I mentioned before, to a full moon in Mercury retrograde on Friday. Mercury retrograde is very, very important to classical astrologers like Arch Crawford. I'm not really a classical astrologer, folks. I'm a numerical astrologer, because all I do is I look at the numbers. I don't look at the zodiac or the readings of these things that the traditional astrologers do. But the people that do traditional astrology, they really rely on the planet Mercury, and it goes retrograde 4 times a year, and when it does that, you're not supposed to sign contracts and do things like that, because it's just not a wise thing to do. So anyway, this is going to be interesting what happens this following week. But the increase in volatility that we've seen in February is going to increase. But February should be one of our more volatile months of the year. We have some of the highest spots coming in. Like there's one today, and then we have another one, I believe, on the 19th, and another one on the 25th. I'll share with you these spots later on as we move farther along. So anyway, that's what we're watching. Someone asked if the IBB could get to the 1.618. Absolutely. The way these markets are acting, they can move anywhere they want to at any particular time. So that's not a problem for them to move up to the next expansion level. That really isn't. There's just no other way to point it out, except for that it does move to those levels very, very strongly. Because once it gets above 1.27, the next level is 1.618, and you've got a bifurcated market. You've got the NASDAQ is up on the day, the composite is up on the day, and then the Dow Jones is down. The S&P is basically flat on the day. The futures are up just a little bit. So that's the main thing that you got to keep in mind as you're looking at a lot of different markets, and they're weighted differently. The Dow Jones is price weighted; it's not cap weighted. So that's a huge difference in what you're looking at. Okay, the next one that I would like to share with you is the S&P with the cash market. So just give me 1 second here till I pull the chart up here, and we will take a look and see where we are, because we right now we've got a little bit of a doji going at the 786 level. Whether that's going to mean anything or not, but I do know that level that we made on the on February 4th is a very, very important low. There's no question in my mind, that is very, very important. Now, we've had a series of really strong days now since February 4th, and if this is correct, we've been up about 8 days. That would be about it. So we were looking somewhere between, the end of this week, between Wednesday and Friday, and then, of course, we have the holiday coming in on Monday. If we start down really bad on Monday, where the Dow, and believe me, the Dow has had several moves of 300 points, and when you see the 500-point move, folks, do not be alarmed, because that's nothing more than a 1.618 expansion of that 300-point move, and with levels where we are now, that is not very much. 500 points in the Dow is just barely over 3.5%, so you can get that type of move without any trouble and not see any difference in your portfolios most of the time. It's just going to scare a whole lot of people with the increased volatility that we'll be looking at, over time. So that's the ideal of what we're trying to look at. I wanted to bring up one of Basil's favorite things, and also mine, but I never trade it, but I do watch it, and that is the VIX index of volatility, because we are very, very close to a 786 retracement here. It's within a heartbeat of where it could make the 786. I want to mark this a little bit better, I hope, and then you'll be able to see it. Give me 1 second. Yeah, boy, it's tough when you can't walk and chew gum at the same time. But around that 14 level in the VIX index, we're going to come into some pretty good support. That's the 786 retracement. You notice we've been in this wide trading band, And on February 4th, we hit the 21 level that matched the highs that we had back in June and October. And so we're looking at something that could be, very, very dramatic if we move any higher. We got a call from one of our special people from sunny Philadelphia. John, how are you today?
Hey, Larry, I'm very well. How about yourself?
I'm good. We've already checked on the weather this morning there, so good luck.
Well, 600,000 people without power a week ago.
Yes.
And I'm afraid all the people who perform that valuable job of repairing down lines, I believe all those people have fled down to Atlanta to handle their problem here today. So if we get more ice up in Philadelphia here, I think we're really going to be out of luck.
Well, we have a guest that's from Philadelphia with us for a few weeks, and he was telling us that his daughter has not had power in Philadelphia. She lives in one of the suburbs right outside the city, but they have a generator, so that they've been living off the generator and the fireplaces, but it's been pretty bad. So I wish you the best of luck, my friend. Everybody should move down to sunny Florida where all the rich people live. Well, I guess they all live in New York, don't they? What can I do for you, my friend?
Larry, you piqued my interest, and I thank you for sharing the NASDAQ and I believe it was the QID observation. I wanted to ask if you could repost the NASDAQ, the NDX hourly charts, and just go over how you see this pattern as being a potential LaRusso 5-point reversal pattern.
Sure. If you'll give me a second, I have to put the chart up, but it'll just take me a few seconds. Well, I think it'll take me a few seconds. Knowing me, it might take 3 days, but we'll give it a shot here. We'll get the NQ here, and then we should be all right. And then we'll do it. You want to do an hourly chart, John?
Please.
Okay, that shouldn't be any problem here. Let's just get this ready. And all I've got to do now is to make it spread it out. Oh, that makes a really beautiful one. Just give me 1 second, and I want to clean out all the fib numbers that I have on it, because as they complete, I like to get in and oh dear, I've got to get rid of all of them. So hold on just a second. I've got about 6 of them on here. I don't look at this too often, so give me a break.
Just, now as you're doing that,
yes,
in the Tiger's Den, I actually posted that chart, the NASDAQ 100 cash index, the hourly chart, and put it in there with my interpretation or my crude and probably inaccurate labeling of LaRusso's pattern. And of course, I know of Rick's reputation. Never met him, and I actually never have frankly seen any of work produced by him. I thought I might ask you on this particular index if you could elaborate on what you think he might see in this pattern.
Well, what I'm looking at here is, I'm watching these highs because they're equal. The one from January to the end of early January to the one that we had around the third week, and then we came down for two weeks, and we've been up for a week. So we have equal highs between these highs. Now, it's quite easy for this index to go up to the 3660 level, which will be the 1.27 expansion, and that will complete the reverse point wave, on the hourly chart, which would also complete it on the daily chart. But on the daily chart, it would be a 1.27 number, and that would come in around the 3660 level, around 40 points from where we are right now. This would mean we've got to break into new high ground in the NASDAQ here in the next day or so. But if we don't do it by Friday and the market starts to sell off, it's going to have a real difficult time going through that level. That's my opinion of what I'm seeing right now.
Gotcha. Very good. Could I also ask you just to elaborate as to what you likely see in the next 2 weeks on the gold market, if you have any particular strong opinion?
Well, I do have an opinion, and the key is going to be what happens with our market today. We really need gold to break out above that 1297 level with a lot of gusto, because it's setting right at the 61% retracement of last month's highs, and it's taken it's a beautiful AB equals CD pattern coming in there at the same time. So all of that is telling me that there's a high potential here that gold is if it doesn't get moving, it's going to back off, and you could get a $40 or $50 retracement, and maybe even more. Because silver right now, silver is leading, but it isn't leading by much. It's only up 19 cents, and gold's up $5. So there's not a lot of interest in it. It really needs to get the power and the volume going in it to make it look a lot better. So that's what I'm saying. You've got to get it breaking out here. This is a Wednesday, and you're right up against this major fib resistance that we posted earlier in the room, and you know that as well as I do. That it's got to get through it and close above it to get people's attention, and then you have something to look at. And I want to mention one other thing, John, is
yes, sir.
Rick LaRusso happens to be a good friend, and I'm going to have Rick on as a guest. I'm going to try to do it next week, and his contract that he had with Morgan Stanley, I believe, allows him to do radio shows now, because after they let him go, he was only gone about 6 months, and they wanted him back so bad that he actually became a independent contractor, which is even much better for him because he can work at home and he does a lot better. But his work was so good that everybody wanted it, and they started complaining, and so Morgan came to him and said, look, why don't you do an independent letter here? And so they did, and it turned out to be good for him. So I'm going to get him on the show. He's a fun guy to talk to, and he's very, very smart, as you know, and he'll answer some of these questions and talk about some of these markets.
Larry, that would be terrific. It would be very interesting to hear from him specifically that pattern assessment as applied to that monthly Dow chart, of course, which you've shown many times, and what his read is about the action that's occurred since December 31st, and how that is either reinforcing, confirming, or leaving him uncertain as to the future path in the aftermath of this 5-point reversal pattern.
That's true. And you remember we talked about the 1973 market from 1965 to 1973 when we talked. Yes. But the NASDAQ, we didn't even have a NASDAQ then. It was only about 6 months old because it started in late 1972 there at 141 West Jackson there in the Board of Trade building. And it was really, quite a while before the NASDAQ was any influence at all. If you remember, not many people even remember this, but I think it was called the, what was that thing out of Kansas City, the index that was so big?
The Value Line.
Yeah, the Value Line Index. The Value Line Index was much bigger than the NASDAQ, but the Value Line people didn't want to be associated with markets or futures or anything like that, and so they lost it, and I don't even know if it exists anymore.
It does, Larry, it does not, and it's funny you should mention that. I'd totally forgotten about that. Back in the 90s, I actually found it profitable analyzing that Value Line arithmetic average, and there were futures traded out of the Kansas City Board of Trade based upon that Value Line arithmetic index. And I was sorry to see that go, to tell you the truth.
Hey, John, thanks for calling in, my friend, and we'll talk to you next week maybe, okay? We'll get Rick on the
Thanks so much.
line. Thank you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and I'm going to end the show to talk about gold because we're in such a really critical level here. I've posted the daily gold chart back into the Tiger Den. And it also has on it, it's overlaid the silver market. As you can see, silver is lagging gold quite a bit. Today it's not. It's up a little bit bigger on a percentage basis than gold, but as you can see, it's still lagging very, very badly. Gold's been in a run now for about 10 days where we've had higher highs and higher lows. That's another reason why I certainly wouldn't want to be a big buyer of a breakout here. As a matter of fact, I'd be trying to find a place to sell it short here against this 61% retracement, especially if it doesn't go charging ahead here, today, and then we'll have a, better idea tomorrow if it gaps up or something or gaps down. Maybe that'll be an idea, for a trading situation. But right now it's up against really strong resistance in both gold and silver. But silver is lagging so badly. The other thing that makes me wonder about a valid breakout is the fact that the XAU is not even up on the day with gold and silver both up. And so that's another thing that gives me a little bit of trepidation. And then also we have the open interest and volume. We haven't had any players come into this market very often recently. I mean, this just has been in a really trading range. We've had some, nice short-term volatility, which is good, but we've not had any really big players coming in, putting on big positions, which you would see in an increase in open interest and an increase in volume. And that's something that I think is very, very important. The other thing that we need to watch is that we've had this big rally now in stock index futures, and if this stock index futures, the open interest drops during this week rally, if we have a much lower open interest than we did last week, that's telling you that all this move was short covering, and then you're going to be in big trouble because there's not many people wanting to buy it except those last shorts that covered, and then the market will drop of its own weight. So that's the bottom line of what we're watching in here as far as both gold and the stock indices. The key dates coming up, of course, is Friday. We've got there's a key date today that it's one of the better dates of the month. And then we have the full moon on the 14th, which has a 2-day orb, so that could happen today or tomorrow or Friday, or not even happen at all. And then also we have Mercury retrograde on Friday. So all that's coming together at a time when the markets are extremely volatile, and that's exactly what you like to have. You like to have this big up and down movement, and it's just those are the ideal times for pattern recognition. Someone asked me the question about who was the gentleman that wrote the book about George Lindsay, and his name was Ed Carlson. That's C-A-R-L-S-O-N. He's out of Seattle. If you Google it, just hit Ed Carlson with George Lindsay, and that book will come up, and you can get it on Amazon, I believe. And it's a good thing for your library because Lindsay was very, very good at what he did. He did a lot of time counting, and that's what we try to discuss here sometimes, is to look at the look at these things that we're watching. So just remember that the gold's got to get really strong here, and I don't believe it's going to be a valid breakout because of the reasons that I just said. We're up 10 days. We're up against the 61% retracement. Just a lot of things are telling me that this is not a valid breakout in the gold. And we'll have to wait and see if we're going to get that breakout, but right now it is not has happened as yet. We've had a pretty good rally in the Nikkei. It's rallied up to the 382, and that also should be a time of the thing. He was on, but he died the day of the crash. He died on August 25th, Mr. Lindsay. Live every day in an attitude of gratitude, and may God bless.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You're watching Tiger TV.